Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. Sign up for a 1-week free trial, no credit card required, for access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Checking in on XLK, Apple, and Facebook, so all the action with the tech sector on Thursday. Anticipating an inside bar on Friday, certainly more likely than not, considering where we closed, right in the middle of the range, and because that range was so large, anticipating on a Friday that we would see things settle down a little bit. So we are reaching an equilibrium pattern on the shorter term timeframes. We'll be watching this inside bar on Monday. A break of 57.16 will be bearish, and a break of 57.55 will be bullish. And if we see a bull break, we're looking back towards the all-time high. Certainly it's not significant consolidation that has occurred, but we have two different scenarios that have played out in the past 3 months, where we had a complete dump, and then the bulls just showed up with a V-shaped rocket to new all-time highs. And then we had a complete dump, and then we consolidated for almost a month afterwards. So it's different in the sense that the bulls recovered the dump day and were able to stay inside that range. That has not happened yet in the recent dumps in the past. So it is certainly a different setup, but utilizing this inside bar to see how it does play out to start next week will be a good indication of, who's going to win that battle that's occurring after that dump took place. So the weekly time frame on a lot of individual names and a lot of markets are bearish reversal candlesticks. That being said, in 2017, bearish reversal candlesticks on the weekly time frame have to be taken with a grain of salt, especially in blue sky breakout, as the bulls are much more able to negate those candlesticks and see continuation. So we're going to be watching very close. In order to confirm this bearish candlestick, we're going to have to see a break of that 56.79 low of the dump in order to be looking for another red week and confirmation of the doji. So that's pretty much step one that has to occur for the bears, is a break of 56.79. So Apple was one of the names hit the hardest with the dump. We took back 9 days of upside with that pullback. Very, very tight range on Friday. So a lot of people with hypotheses that it was being pinned to 150 for options expiration, certainly possible, but same thing. We're watching the equilibrium pattern in the inside bar. 149.19 support, 150.23 resistance, and Apple is still the weakest tech name out there on the screen most of the day on Friday. Out of the big 5 tech names that we are watching, Apple was one of the only ones in the red for the vast majority of the day, while Facebook, which continues to be the lead tech bull, was the strongest on my screen. So it's really cool to see this play out, where we've been noting the strength and weakness of individual names in a certain sector here, in this case the tech sector, and watching that over pretty much the past month. It has been consistent, and it continues to play out time and time again. So it's certainly an observation that can be utilized, where if we see tech sector weakness, we know to go with Apple bearish, and if we see tech sector strength, we know to go with Facebook bullish. So looking at that candlestick on Apple, we closed closer to the low of the day than towards the high. Weekly time frame is a bearish reversal candlestick after a short-term bounce. It is a lower high compared to the all-time high. The big red flag for the Apple bulls would be if we lose 140.220, which would pretty much be a bearish reaction to earnings, to see that kind of pullback and a break of that level, because that would give us a lower high and lower low here on the weekly time frame, changing a very strong uptrend that has been in play for over the past year. Facebook bulls, you see that daily candlestick, how completely different it is compared to Apple, and we're watching the range here as well. 169.05 support. If that breaks, it's bearish. 173.43 resistance. If that breaks, we're looking at the all-time high. So bulls are still in absolute full control, and hardly even saw any downside action with the tech sector dump on Thursday because of the positioning due to earnings, which certainly was beneficial for the bulls. So we're looking at the all-time high, 175.49, if we get that bull break of the inside bar on Monday. The weekly candlestick, nowhere near bearish. Breakout mode, bulls in full control. Facebook, the lead tech bull, Apple, the lead tech bear. And when I say the big 5 that we follow, I'm talking about Apple, Facebook, Amazon, Netflix, Google. And these two are at each end of the spectrum. So I appreciate you watching. Have a great rest of your weekend, and we'll continue to check back in.